Here we go. First look at first quarter GDP. Always a biggie. Well, we were looking for up 0.7. Atlanta said up 0.6. And the survey says up 0.5%, up 0.5. Now, this is kind of where it was hovering with Atlanta for a while. It was upgraded a bit on numbers like a smaller trade deficit. But, of course, that follows the 1.4, which is unrevised. And it is the smallest since the down 0.9 of the first quarter of 2014. Remember, it was up 0.6 in the first quarter of 2015. Let's look at jobless claims, shall we? 257,000. So last week, 247, lowest since 73. It was upgraded to 248. And then, of course, we add 9,000 more. So there's your jump. Now let's go back to that GDP. Look at some internals. Personal consumption expected up 1.7 is up 1.9. The GDP price index expected up 0.5 is up 0.7. And the personal consumption expenditure Q over Q expected up 1.9. Jumped the handle up to 2.1. We need to factor those things in, especially considering that oil certainly seems to be eyeing 50 versus 40 or 38, and commodities in general, as advertised by the CRB index, are up, what, close to 5% on the year. Kelly said no stimulus in Japan. I don't know if when they went negative rates, that was a stimulus. I think it's an economy killer. They didn't do any more of it per se, but they were rewarded still with a down 3.5+% move in the stock market. And the dollar yen, well, the dollar's getting hit again. The yen's screaming. It almost made up all the ground once again, staring at comp close to October 2014, just a little bit of ways, but definitely has 108 handle in sight as it's trading 108.25 right now. Back to the gang on Squawk Box.
Rick, I don't know whether you're watching. Andrew interviewed the president. It's going to be in the New York Times magazine. There's a quote at the end where the president is talking about finally being able to burst the myths of the Reagan economy and the notion that was an actual, I don't know, flush period in the United States. So you've got to read this article, because the last quote is amazing, that if the president's able to do one thing, it will be to dispel that myth that those were actually
well, is there any doubt in your mind we dispelled the myth of Ronald Reagan?
Yeah,
Jeez,
because
who's won almost half of the primaries?
0.5,
independent socialists. I rest my case.
0.5%, 8 years of ZERP, and 0.5% is what we get for it. But not just taking the victory lap to spin this legacy of his own, but actually going back to impugn the Reagan numbers historically. It's amazing. But you don't miss that piece.
No, I can't wait to see it. And, you know, all the seeds Reagan planted that end up sprouting in the Clinton administration. I don't know how much seeds are planted in this barren farmland right now.
Right. Okay.
Let's, on that note, actually talk about these sort of scanty GDP numbers this morning. Steve Leisman is here. Thank you, Rick. Ethan Harris joins us. He's head of global economics research at Bank of A Merrill Lynch. Steve, first to you. I mean, there's a big disappointment, again, just because there were plenty of people telling us this morning, they might be a little bit higher than that, maybe towards 1%, Nariman Baravesh. 0.5%, what's going on?
Well, it's not that big a disappointment. The disappointment came about a month ago when the numbers started to crash on us. And it's another weak first quarter in a string of weak first quarters. I think it's like 6 out of the last 8 first quarters have been weak.
Fourth quarter was weak this time.
The fourth quarter was weak this time.
Like the previous.
You're right. And Joe, we don't know. We simply don't know if this is a seasonal adjustment issue or if this is real weakness. And I think
you're the Nobel laureate on seasonal adjustments for the first
I haven't
quarter,
won the prize yet. But I'm expecting it for that great statistical.
But say he doesn't even think the GDP data is reliable because of all these different
in our Fed survey, we asked economists, if, faced with better job numbers and weak GDP numbers, most said they side with the better jobs numbers. But I want to just give you what was weak and what was, well, strong. Gets a quote around it because there wasn't a whole lot that was strong in here. The big story here that jumps out the page is business investment tanking by 5.9%. Some of that's going to be oil and gas, but you don't have other non-oil and gas companies picking up the slack. We have a problem with business investment, and it's a big issue we need to deal with. And part of the problem is that consumer spending, which had been running, by the way, for most of the last couple of years at a 3% clip, has steadily ratcheted down. You did 2.4 in the fourth quarter, and now just 1.9%, with a big tanking in durables, and I think that has to do with the car sales coming off We do know income's doing okay. So some people, again, the big story for investors here is this: do you once again play a second quarter rebound? And it's worked for you the last couple of years.